Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
Jim, thanks as always for having me.
Tim, is the weakness we're seeing on the stock markets today meaningful, and how does it relate to your cycles?
Well, we have been at a clustering of cycles where the market has been. In other words, there's been some cycles that's due. They've been stretched. The market hasn't wanted to give up the ghost to those cycles. It first started trying, really to bite in late October and into November. And then we had this last push up into that clustering, and I think that's what we're seeing here. Maybe, if I get a short-term sell signal, I don't know if I will, but if I get a short-term sell signal here that starts to develop and, turns into an intermediate-term cycle, then I think that's the case. I think that clustering is bitten, and we get a move down, into obviously the cyclical lows that are due, in conjunction with that clustering of cycles.
What about Dow Theory? What's it telling you about stuff that's going on right now?
Well, the Dow Theory, in one sense, nothing. In another sense, the Dow Theory primary bullish trend change that occurred coming out of that finally was triggered coming out of the March low remains intact. And until we get no non-confirmation or anything at this point. So until we get a primary bearish trend change, the existing bullish trend change stands. And so I guess from weaving in the cyclical aspect of it, if the decline into these intermediate term lows that should be ahead, if they trigger a primary bearish trend change, then okay, there's something more potentially developing here. But at this point, yes, we have a down day, but it has no effect on Dow Theory. And, like I said, if we go into these lows and we see the triggering of a primary bearish trend change, then it's going to be a warning that something more is taking place, but not yet.
What about the weakness we've seen in the utilities, and how does that relate to Dow Theory?
Well, that's a good question. Some I have heard people misquote or misuse the utility average because we have obviously the Dow Jones Industrials, the transports, and then the Dow Jones utilities, and I've seen people try to equate that to Dow Theory. But to clarify that, when Charles Dow and came up with his methods of reading the averages, and William Peter Hamilton wrote about them in the early 1900s, the utility average did not even exist. So the utilities clearly have nothing to do with Dow Theory. That said, that doesn't mean that they're not valuable, because they are, and I have found that they are. In fact, I did a study. It's been a while. I don't remember all the details to the study. I'd have to go back and find my notes and that sort of thing. But, non-confirmations, what we have found is that non-confirmations at major tops have been seen throughout history since the inception of the utility. So, in fact, we do have a non-confirmation now with the utilities, and they have shown relative weakness. So, if you apply, if you will, again, clarify, the utilities are not officially, and nor am I trying to say or make them a part of Dow Theory. I'm saying if you take the concept of Dow Theory and apply it to the utilities, it is telling us something. It is warning here. And we are seeing a non-confirmation, and we have seen relative weakness. So, there may be something to that, because, like I said, when you go back in time, there does tend to be non-confirmation. So it may be a front runner, if you will, a leading indicator of something is I guess what I'm trying to say.
Mm-hmm. Now, when I'm looking at utilities, the major winter storm that went through the central U.S., hitting Texas especially hard, are utilities going to go down because they're going to be spending so much money repairing the damage done by this storm?
Fundamentally, I don't know why utilities would be weak. I don't know. I think, I can't answer that question. I have no idea. I'm just looking at the utility average as a whole. I see what I see. Fundamentally, what's driving it, I'm not sure. I think that obviously there was damage done in Texas to the utilities, but I don't know how that would be. I don't know how that would be negative toward price. Really, I don't have any idea. I can't answer
of
that.
course, yeah. With the shortages in electricity, people were getting, $12,000, $16,000 power bills for the 2 hours that the power was on.
Yeah, you would think that would be positive for the utilities, if anything. So I can't. Yeah, again, I have no idea how that would relate to what we're seeing with the utility average. But the utility average, it definitely has been showing some relative weakness. And I just pulled up a chart while you were talking. And, you talk about the non-confirmations and the concept of non-confirmations. The utilities, they never moved back above their 2020 high. And now, when everything else, remember I said we were talking about the cycles in the first question. It said that we had a clustering of cycles that were due, and they started trying to bite back in October, November. Well, in fact, as I look at the chart of the of the utilities, they did in fact peak in, it was the first week of November. So the cycle did bite there, and they have begun to break down since. So again, they may be telling us something. There may be like a leading indicator there.
We'll have more with Tim Cyclesman Wood right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what about the ongoing rise in long-term rates and the corresponding weakness in short-term rates?
Well, I first saw that with the cycles back in June of 2020, in May of 2020 actually, and wrote about it in June of 2020 in the research letter, that I saw that handwriting on the wall. I didn't know if it was going to develop, but I saw the potential. I saw us headed that way, if you will. And it has come to pass. And, I think, I don't know what it's telling us exactly, but I think it may be telling us that it tells us something's not right. I tend to think that it could be telling us maybe that there's liquidity issues trying to emerge. I don't really know what it's telling us, but something's not right. I think what a lot of people are reading it, though, as a sign of inflation, and I think a lot of people are potentially misreading that. I see it as a sign that something is not right with, and that too is perhaps a leading indicator of something more meaningful with equities. But it's a warning sign to me.
Some people feel we're going into a commodities super cycle like the 70s or from the early 2000s. What's your thoughts on that?
I don't see it that way. I think part of this yield curve thing with the rising longer term rates and or declining short term rates is also being read that way. And then, looking at it cyclically, the rise in commodity prices, of course, they have been, on fire. They've done well. But, if you look at the CRB index and, the bounce back that we've seen in oil and heck, one trip to the grocery store or people building houses, material costs are astronomical. But when you look at it cyclically, I think that we had a 3-year cycle low in the CRB back in March, April, whenever it was April, I think, on the CRB, and we had that corresponded with the 4-year cycle low in equities, and I think we've seen these tremendous bounces. In the case of equities, hell, it's carried us to all-time new highs, and everybody thinks everything's off to the races and good again. But I remind you that, like I've talked before about the underlying economy, we're struggling to get back to the point of this being, prior to this coronavirus shutdown and all that. We were dealing with the worst the worst economic recovery since the Great Depression, and we're struggling just to get back to that point. And so the way I see it is I don't think we're off to the races with some commodity boom, because I don't think we have an economy to support it. I think what this is going to do is commodity prices, gasoline prices, and so forth are going to rise to the point they're going to be the last nail in the coffin with the economy. And it's going to set us up for a deflationary spiral where everything comes down like it did in 2008. Once this big, massive, the pieces, parts are in place for this massive bubble that we've been talking about fall in place, and we get the structure there and it all cracks, I maintain it all goes down together. And I think that talking about the utilities, talking about the interest rates, the rising yield curve and so forth, and I said it's telling us something's not right. I think this is all telling us, it's pointing that direction in my mind that something's not right. I think this is a fake out move that people are misreading.
With a fake out move, again, is it best, okay, the stock markets have really boomed over the last little bit. Take your profits and then wait for what could be either a major dip or a crash, and then buy.
Well, I can't give specific advice, but let me say this. Until I see structure, this rally, someone says they could have predicted that this rally coming out of the March low would have done what it's done. I don't mean to be blunt about it, but I'm going to say, yeah, that's probably not so, because who could have ever imagined that this thing would have bounced like it has? So what I'm saying is, I say that to say this, it could go on. It may not be done. And so in my world, until we see structure, while I know we're dealing with a bubble, and I know the environment I think I know the environment that we're in with, like I said, this being a fake out move and all these warnings that something's not quite right. But until we get structure in place, like we did in January, February 2020 to tell us that a turn has happened, then, we're successfully still walking through the minefield. So I'm looking for that structure, and until we get there, it can go on. In fact, I have a couple of windows, looking at the cyclical, from this vantage point at this time. We're early in the year, and as the year progresses and we see the actual intermediate term cycles that are coming up, and we, get a little closer to the target, if you will, then I can narrow the window. But at this point, I see two cyclical opportunities for, the potential bubble top to occur this year. And one of them is where it could start to form here. I don't know that yet. And then the other one is, on into the summer. So we'll see. But, anyway, I think, with the commodity thing, it's a fake out.
We'll have more with Tim Cyclesman Wood right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, the Fed says it's going to fight like hell to keep interest rates down. Why would they?
I love it. I knew that Powell spoke, and I didn't know what he said, but that's stating the obvious. He's going to fight like hell to keep interest rates down. Here's a fact, and I challenge anyone to do this. I've done it. I know. Go to some source where you can get the I have it going back into the 40s, short-term T-bill rate, and put it in a spreadsheet. And then go and daily spreadsheet, daily data. And then in the next column, you go and you get the Fed funds rate or the discount rate, and you drop it in column number 2. And you compare the two. And what you're going to find is that the Fed follows the market. The Fed follows the market. The only question is, how much of a spread, how far ahead do they let the Fed, do they let the short-term rates get before they respond to the market? In other words, if short-term rates are going down, how far ahead do they let those rates get before they begin to cut? Or when rates are going up, how far ahead do they let the market get before they begin to raise rates? That's the only variable, how far the spread gets. But they follow. And so these rates, these short-term rates are declining. That's coming out and saying, like, I'm going to fight like hell to keep it daylight between the time frame that it's daylight outside. I mean, that's saying nothing. So that's kind of comical, really. It's one of the biggest mouthpieces, or excuse me, one of the biggest tools they have is their mouth, and that's just posturing, man.
Tim, what's going on with the U.S. dollar?
It is trying to make a longer-term low. We're in the early side of the window for a 4-year cycle low, but I don't know that we're there yet because, like I said, we're in the early side of the window for that low. Looking at it statistically, I have timing bands, and I know over time that the lows will fall between, statistically between this time frame and this time frame within a window of time. And so we're on the early side of that. So it's a little early, but we had an intermediate term low due back in January. That cycle came in, and we're retesting that low here. Whether or not that holds, I don't know. We may have another intermediate term cycle or two down into this 4-year cycle low, but I think that the dollar is at, near, or flirting with some longer term cycle lows. The dollar's trying to make a bottom here. Back in November, December, everybody was talking about the dollar crash. It was even popping up in ads on stock charts. You could see people talking about the dollar collapse and that sort of thing. Again, I don't see that. It's we're trying to make a bottom, and when it does, I think that's going to correspond with or loosely correspond. I mean, it's not tit for tat, not to the day. I'm not saying that, but I think as the dollar rolls into the 4-year cycle low, commodities are going to be rolling into the cyclical top in association with the advance out of the April low in the CRB. I think that's probably going to coincide closely with the 4-year cycle top in equities and the overall setup. And I think the potential for the unwinding of the bubble, or at least the 4-year cycle top in equities.
When the bubble bursts, what goes down with it? Is anything safe?
I think everything goes down with it. If you look at 08, if you look at 2020, it all went down together. Why is it going to be different here? I mean, I think it's going to take. I see this as a deflationary unwinding once it bites. Once it'll try, and we've talked about this before. It'll try to set up, and then the Fed comes out and they can do their magic and say that they're printing money in QE and first one thing, and they're going to do their best to keep rates low, and the market responds to it and buys it, and so they've managed to just keep it going. But once it bites and those tricks no longer work, then I think it all goes down together, and there's going to be nothing they can do.
Tim, gold and silver, are they going to be survivors here? Because it's been pointed out to me, gold has, on average, has gone up faster than the stock market. And when the stock market goes down, it goes down slower. So it still holds some of its value. Will that be true?
Well, I haven't done that specific study. I think that gold is going to go, it may be true. I think gold is going to go down. It's probably true, but without looking at it, and actually putting the numbers on it, I don't want to testify to something that I don't know. But I do think gold, like in 2008, is going to get hit with everything else. And let me say this, the big enchilada that everybody's looking for with gold, I believe, is coming up with this next 9-year cycle. Talk about the clustering of cycles. Well, there's some longer term clustering of cycles due with commodities, with gold, with equities, with everything after the bursting of this thing. And so I think that next long-term cycle with gold is the cycle low that all the gold bugs have been looking for. That's out there. I agree. But I don't think we're there now. I think that's down the road after the disaster.
What's going to go on with oil prices?
I think for right now, again, until I get structure and a signal, it's just like the CRB. They're up and away. But I think it's just like the CRB, one and the same. It's counter trend. Everything's moving up out of the cyclical lows that we're seeing in March, April, May, and I think I don't think it's sustainable.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.